morning. I'm Mai Rodriguez. Welcome to Pathways to Success. We'll return the spotlight on the heroes of the Philippine economy, our micro, small, and medium enterprises. We follow their inspiring journey and give great insight on what it takes to scale up their business. Securing funding is crucial for startups looking to implement ideas, innovate, and grow. With traditional financing options often limited, many entrepreneurs are seeking angel investors, wealthy individuals who provide capital in exchange for equity or convertible debt. This approach fuels business growth and fosters innovation across sectors. Joining us today, Artie Lopez, a business coach and financing expert, to discuss what angel investors are looking for, the due diligence process, and how founders can effectively prepare to attract investment. Hi, Artie. Welcome to Pathways to Success.
Thank you so much, Mai. Very, very happy to be here.
We're glad to see you here today. Today, we're going to talk about, or we're going to know about what it takes to fund a startup business, what angel investors are looking for. So you have been coaching founders and entrepreneurs for the last 10 years. Can you share a bit more about your journey and what inspired you to start coaching?
Sure. So in the last 10 years, I've actually been an entrepreneur myself, and then I've been a mentor and coach, and then I've also become an investor. So my experience is quite unique in that I have the whole spectrum, and that is something that I think that I'd like to share with other founders and entrepreneurs, having those different points of view. So that is why I think that right now, what I'm doing in terms of coaching is being able to give them those insights that otherwise they may not have known.
Yes, and funding. It's all about funding. It's one of the biggest hurdles for many businesses, startups, MSMEs. What are some of the common misconceptions when it comes to securing investment?
You know, funny enough, Mai, is that whenever I talk to founders that are raising money or are fundraising, they always say that there's no money in the Philippines or that there are no investors in the Philippines. And unfortunately, that's a misconception. There actually is a very healthy set of investors and a lot of what we call dry powder or money that to be invested in businesses here. Except that what founders or early stage or first-time entrepreneurs actually don't realize or recognize is that they have to be prepared when it comes to raising money. It's not really easy. It's not just about building a business, but even the preparation for investment is a separate endeavor and activity that you really have to work on. So there's a lot of pre-work that needs to be done. So I guess that's one of the first things that I think are really important to understand. Now, there is an opportunity. It's just that you have to be prepared for it.
Yes. So there is no money in the Philippines. That is not actually the case. And given these misconceptions, what are the biggest challenges that startups face when raising funds, and what solutions can, help them overcome these obstacles?
I think that a lot of early stage founders and entrepreneurs, they have to understand first in terms of what business are they trying to put up, and then what are the matching kinds of investors or investment that they can take. Because unfortunately, one of the other things that early stage founders don't realize is that it's different depending on the type of business and also in terms of the type of investor that they need to attract. So let's say, for example, as a entrepreneur, you have to first understand what are my options. You can borrow money, or you can ask for investment or investors. And I would say that if you are an early stage business, I would sort of try to stay away from borrowing money, because unfortunately that puts more stress on the business that you put up and a lot more risk for you as an entrepreneur. Now, if you're looking for investment, this is money that comes from investors who know that there is a chance that their money might not convert, might not turn into a good investment for them. So they are willing to take that risk. So these are just some of the things that entrepreneurs need to know when they're starting a business. Do I want to borrow money first, or do I want to look for investors and get investment? Now, once you've determined, let's say I want to get investors, what kind of investor am I looking for? Am I looking for an early stage investor that will help me in the early parts? or in the later parts of the business. And you mentioned earlier that angel investors, no? And angel investors, the reason we call them angel investors is because they come in at the very start of the business.
Early stage startup.
Correct. Okay. And they act as sort of like a guardian angel taking care of you as you grow the business.
They're very hands-on, right? And also they also do mentoring.
Exactly.
Guiding the business at the early stage.
Exactly. So this is they provide more than just money. They also provide guidance. They help you open doors, meet different people and businesses that you need to meet, and that's why they're called angel investors.
The connections are one of the most important things for a starting entrepreneur, and that first introduction does a lot.
Yes, definitely. Right? Which is why whenever founders look for angel investors, I always try to tell them and remind them, ask yourself, what else do you need more than money? And that is a good signal or a good filter for you to find out which angel investors you want to approach.
Okay, let's talk about the various options here for funding. You mentioned lenders, your personal savings, or investors. What should we know about these options, and how do you choose the best fit for your business?
So, as I mentioned earlier, when it comes to borrowing or getting money from people who are lending institutions, I would only recommend this if you already have a business that is doing well and has positive cash flow. Otherwise, what you're doing is if you're borrowing money and you have to pay interest on that, it just puts, as mentioned, a lot more stress on the business, and it affects your cash flow overall. And this is why I would focus more on either if you do have personal savings or whatever capital that you could put into the business, that would be good. But if not, then you can go to other people and other institutions. So it could be angel investors, it could be financing institutions that actually do invest. And you could also look for different organizations like incubators, accelerators, and supporters that help also fund and support the startups and businesses financially.
Yes. So, well, as an angel investor, what is your motivation aside from, of course, the financial returns?
So when it comes to angel investment, one of the things that I think angel investors also look for is a business that they actually can care about. So it's usually about industries or businesses that they either are very interested in because of their experience or their past, but also something where they can really help, where they know that they can provide value. And that is the thing that for founders and entrepreneurs, it would always be good to look for investors who do have that level of interest. So I think that is the first thing that they should look for, not just the money. Because especially as an early founder or entrepreneur, you really need the support, you really need the guidance from someone who knows the space.
So for startups now that are looking to connect with angel investors, what can they, how can they approach their potential investor?
So there are different organizations, there are different angel syndicates. There's one very active angel syndicate here in the Philippines called MAIN, or the Manila Angel Investor Network. There are other angel syndicates in other countries like in Singapore, in Malaysia, Indonesia. And a lot of these guys are always very open, so it's actually easy to contact them and tell them that you have a potential business looking for, or a startup that is looking for fundraising or investment. So that is, I think, one thing that they can do and approach. I also think that there's going to be a lot more angel investors, especially here in the country, as the community of the ecosystem of startup entrepreneurs actually grows more.
Okay, so angel investors have emerged as a crucial part of the startup ecosystem. We have substantially discussed funding. I hope you guys are finding it helpful, but we have to take a very quick break. When we come back, we'll discuss what investors look for in startups. Welcome back to Pathways to Success. We're still with Artie Lopez, our startup coach today, and now it's time to discuss what investors really look for in a startup. Now, Artie, when evaluating a startup, what do you typically focus on, and how do those factors influence your decision as an investor?
Sure. I think a lot of founders, when they try to look for investors, they always try to only show the potential return.
Yeah.
But what they don't understand is that us as investors, we kind of look at the whole picture. So we try to see first, yes, of course, we definitely look at the potential of the business and how it can grow. But we also look at the potential success because of the different things that they have, like how's the team? Do they have a solid team? Do they have the right corporate structure or business structure to allow for investment? How big is the market? Is it a business that can actually grow? Or maybe is the market too small, then maybe investment doesn't make sense. So a lot of these things we really take a look at holistically, not just the bottom line, not just the, what it is important, it's not the only thing we look at.
Yeah, you know what most investors say, it starts with the people. You have to have a solid team with a solid background.
That's very much correct. So when we look at least when I look at investment opportunity, I want to see if the team is complete in terms of, let's say, filling the gaps of the different parts of the business that needs some sort of, I guess, leadership. Let's say there's some, if it's a tech startup, then there's someone in tech, there's someone that's good with business, there's someone that's good with marketing, and if not, then do they have the right mentors or advisors that can actually help them?
Yeah. So everyone should have their own place in the business, and also after evaluating these factors, how do you now balance these against the potential risks?
So there's always going to be risk in any investment in any business. So as investors, we already know that. What we do is we try to balance the potential opportunity versus that risk. And that's where the different things like market size and the size of the investment and the price or the cost of the investment coming in versus the benefit comes in. That's where those come in when we balance it to the potential risk.
Now let's go to the mindset of startup founder. Of course, they have to do due diligence when looking for an angel, right? So what are your tips on how they can best prepare for this process? Because this can be overwhelming.
Yeah, definitely. So due diligence is really a two-way street. When an investor does due diligence on the startup because they want to understand if they can invest in it, you as a founder must also do diligence on the investor and understand, is this the kind of investor that I want to work with maybe for the next couple of years? Will they be able to really support and help my business as I grow it? And a lot of the time, entrepreneurs make the mistake and they don't do that. They just want to get the money so that they can run their business. But unfortunately, if you don't, this becomes a potential issue later down the road. So I really recommend that they take the time to really process that, find out what are the legal requirements and financial responsibilities of the founder to the investor and vice versa.
Of course, there are a lot of things to look over, the business plans, financial statements. What is the top thing that an angel investor should focus on?
Well, at least for me, when I evaluate startups, I really want to understand if the founder knows that the metrics that they need to monitor and they need to measure. Because if they don't know what they measure, then they can't improve those metrics and they can't improve those numbers. So I would like to understand if the founder has an understanding of the business model, their unit economics. They might not have financial statements yet because they might be an early stage business, but just the understanding or forecast of what the business could be is something that I would look at.
Let's touch on the legalities or the legal responsibilities for a bit, because once a startup secures funding, what are the most important legal and financial responsibilities that they need to be aware of?
So whenever, most of the time when founders and entrepreneurs get funding, there's usually an exchange of equity or ownership into the company. So the legality of that, how that is done in terms of the paperwork with whatever, let's say if you're a business in the Philippines, the different shareholders and how it's structured is going to be very important. And as a founder, you need to understand that, because if you don't, there could be a possibility in the future where potentially you could, let's say, lose control of the company, or maybe the shareholding structure between you and your co-founders and partners might become an issue in the future. All of these things have to be on paper All of these things have to be approved by every single stakeholder, and all of these things have to be submitted to the proper regulatory bodies.
Now, let's go to the exit strategy, because I understand angels typically want to see a clear exit plan. So what's the best approach in planning an exit strategy that will benefit both sides?
So when it comes to starting a business, there's different ways to exit. And in tech startups, for angel investors, usually it's either through an IPO or an acquisition or a merger. And what this necessarily means is that for an angel investor, you don't see any return until one of these two things happen.
Okay.
So during the course of the business, you're just an active participant in supporting the startup, but you only see the return when there's an acquisition or when there's an IPO. So as a founder, when you're pitching to the angel investor, you should already start to see what are the potential exits that I could have.
Yeah.
Who could I potentially sell to? Who could I potentially be acquired by? Or do I really want to have an IPO for my business? Or maybe I just want to run the business successfully in the future. That is something that has to be conversation and agreement between you and the investors that you have.
From the very beginning.
From the very beginning.
Yeah. So what makes an exit strategy effective? What key elements should be there?
Well, of course, having very, very good business fundamentals and metrics. Let's say, for example, if you want to go to IPO, there are certain metrics that you have to hit to be able to go to the Philippine Stock Exchange, or maybe even foreign and abroad. But when it comes to, let's say, an acquisition, then you also have to see who are the players in the space that I'm doing my business that can actually potentially acquire me, and what is the value that I bring to the table. And that is what I push, and that is what I optimize for when I run my business. So this is kind of like having that long-term plan and strategy of where I want to go, but also knowing the different steps to get there.
Now, Artie, over the months, over the years, as the business grows, both sides should revisit this exit strategy, right? How often should they revisit this?
Definitely, because it's not because you plan it in the start, it's going to happen, right? It's going to, over the course of years, the business will undergo different changes under different courses. So you should really have a good relationship with your investor, which means that you should be meeting with them regularly. Most of the time, it's done on a monthly basis. If both of you are busy, then you can do it on a quarterly basis. And on those meetings, those monthly and quarterly meetings, that's when you sort of think about and talk about with your investor, this is how we're doing right now, this is what we want to do for the future, and this is the change in the overall long-term strategy.
Right. Thank you so much for those insights, but we have to take a very quick break. Pathways to Success. We'll be right back. Welcome back to Pathways to Success. Now, here's some good news for MSMEs and startups. MVP Group's Idea Space Ventures invests in 5 new startups in its latest accelerator cohort. The list includes Koyo for property management, Flying Tigers Express, a logistics startup, Item Count for inventory management, Remotify for remote work management, and Swift Claims for healthcare insurance processing. Each will receive mentorship and guidance in business operations, fundraising, and marketing strategies. And Pure Gold Price Club Inc. is expanding in the Visayas region to focus on local growth. The company aims to engage micro enterprises in local communities through events like the Sari Sari Store Mass Caravan. Company President Ferdinand Vincent Co stated that this expansion will directly benefit households and small businesses. Now back to our guest. We are still with startup coach Artie Lopez. Now, Artie, let's wrap up our discussion on financing startups. Looking ahead, what trends do you see shaping the future of investing, and how should startup founders prepare for these changes?
So I've been doing this for 10 years, and I think that in the last 3 to 4 years, I've seen more and more investors coming into the country, especially from other areas. Before, it would only be local investors, and then it would be regional, Singapore, Malaysia, Indonesia. But now, we're starting to see investors all the way from Eastern Europe to the US, Silicon Valley, that are investing in the Philippines. So I think that it's been very, very attractive. The Philippines has been attractive for investment, and I think that will continue to happen and grow over the next couple of years. And I think that founders and entrepreneurs here in the Philippines should be prepared and understand how to be able to deal with not just local but also these foreign investors.
There's certainly a lot of room in this startup landscape, right? So what should founders keep in mind to secure funding from investors?
I'd like to say the first thing I'd like to say is that first you have to prepare. There's a lot of pre-work. It's not just about asking for money and showing them what the potential would be. There is a lot of work that needs to be done. There's a lot of research and due diligence, as we earlier said. So that's one. The second I'd like to say is that just because you didn't receive investment from an investor, don't take it the wrong way. It has nothing to do with you and your business. It could be something completely different. It could be with regards to the investment thesis or how the investors invest and what they invest in. So I guess don't get discouraged and understand that this is a process just like everything else, and that you should approach the right investor who's looking for the right thing, and that thing is something that you can bring to the table or what your business brings to the
Before we
table.
let you go, one final thing I'd like to ask you. If you could very quickly talk to your younger self, what would you say to your 20-year-old self perhaps?
I would say, start sooner. I always mention that where a lot of the founders and entrepreneurs or anybody in the startup space, it's about time, being able to maximize and really leverage on the time that you have. So if you can start sooner, please do. If any founder, entrepreneur is waiting for a sign out there, this is it. Go do it and start already now so that you can actually get the ball rolling, you can learn, and then you can eventually grow your business.
Yes, that is the best piece of advice. Take it from a business coach and angel investor. Thank you, Artie, for that informative discussion.
Thank you so much, Mai. Happy to be here.
And that is our episode for today. Remember, understanding your options and building strong connections with investors can make all the difference. We look forward to sharing more insights. Tune in to our next episode only here on BNC, the Billionario News Channel.